Today, we're jumping right into the chaos of the crypto market. We're going to follow the wild story of one single token, and by the end, use its journey to build a toolkit, a way for you to spot the difference between a project with a real vision and one that's just pure hype. So, let's start where things got really messy.
You can almost feel that, can't you? It's that gut punch of watching a market just fall off a cliff in real time. It perfectly captures the high-stakes, emotional game we're dealing with, where everything can change in a matter of minutes. And as we're about to see, sometimes that fear is 100% justified.
All right, we are starting right in the middle of the fire. To really get what happened with this token, called ARTX, you have to see the crash itself. This wasn't some slow bleed. This was the market in total freefall.
Just look at the speed of this thing, over 11% gone in 15 minutes. That is not a dip you buy. That is a straight-up nosedive. It's the kind of brutal, stomach-churning drop that this world is famous for.
And here's the price point during that plunge. It just blew right past what traders thought was a safe floor, a support level. It was a clear signal that the sellers were in complete control. The panic was very, very real. And here is where it gets human. This isn't just a number on a chart. We're talking about nearly 12,000 people, a whole community of investors, all watching their money just evaporate in real time. That is a serious gut check moment. Okay, so that was the what, a total price collapse. But now we got to get to the why. What was the big idea here? What was the story that got so many people excited and putting their money in, only for it to end up like this? So the idea, honestly, was pretty cool. It's something called real-world asset tokenization. The project, ULTILAND, wanted to take actual physical art, paintings, antiques, even intellectual property, and put it all on the blockchain. The goal was to create this brand new super liquid market for cultural assets. And this is where it gets interesting, because you have this huge dilemma. On one hand, the promise looked amazing. Tokenizing art, a dual token system, even a $50 million art fund. Big stuff. But hiding right there in the open were some massive problems. Things like their ticker name being confused with other projects, a market cap so small it could be easily pushed around, and then this next one is just a mind blower. So get this. On its very first day, it did $28 million in trading volume, but there were only 19 holders. 19. That is a gigantic, flashing, neon red flag. It means all that money, all that activity, was basically controlled by a tiny group of insiders. If even one of them decided to sell, the whole thing could, and did, come crashing down. But of course, no token exists on an island. The price of RATX was also getting yanked around by this massive tug-of-war that was happening across the entire crypto market. So let's zoom out for a second and look at the bigger picture. Okay, so the forces pulling the market down, the bears, were pretty strong. You had fears that the AI stock bubble might pop. You had old-school crypto wallets suddenly selling at huge amounts. And you had money flowing out of those big Bitcoin ETFs. All of it created this environment of fear where nobody wanted to take on risk. But then, on the other side of the rope, you had some powerful arguments for the bulls. Central banks around the world were talking about cutting rates, big institutions were still quietly buying in, and you had a huge supply of stable coins, which is basically cash sitting on the blockchain just waiting to jump back into the market. And this chart right here just shows you that fear in action. Look at those last few days of October, hundreds of millions of dollars just pouring out day after day. This is what we call the fast money running for the exits. And when that happens, that selling pressure hits every single token, especially the small ones like ARTX. So you see this chaotic market, you see the red flags. How do you actually spot these kinds of traps for yourself before it's too late? Well, let's put together a toolkit you can actually use. First up, we have the bull trap. Here's how it works. The price pops up and breaks through a key level. Everyone gets excited, thinking, this is it, we're going up. And they start buying in. But the move has no real strength, and boom, the price collapses, trapping everyone who bought at the top. And the opposite of that is the bear trap. This is when the price drops below a key support level. It tricks people into panic selling, thinking it's going to zero. But then, just as suddenly, the price rips back upward, leaving everyone who sold at the bottom in the dust. So here are a few things you can actually check. First, look at the trading volume. Does it support the price move? A big move with tiny volume is a huge warning. Second, look for divergence. That's when the price chart says one thing, but your momentum indicators are telling a completely different story. And finally, you can check derivatives data and the order book for any signs of funny business.
Okay, so let's circle back to our case study, RXT. Now that we have this new critical lens, this new toolkit, what can we say about the future of this project? Well, if you look at the sites that try to predict this stuff with data, the outlook is pretty grim. Wallet Investor basically calls it a bad, high-risk investment and thinks it could drop to less than a penny. CoinCodex gives it a little more room to breathe, but their overall feeling is still very bearish. And really, that brings us to the most important question of all. This whole thing was never really just about RDX. It's about this. In a market that is absolutely flooded with hype and hidden traps, how do you learn to tell the difference between a real vision and just vaporware? Because having that skill, that's your best defense. That's everything.